Welcome in, folks. 3 weeks ago on the main channel, Financial Education, I'm sure a lot of you guys follow that channel as well, I did a video called Top 7 Dividend Stocks to Buy Now. And the very first stock I mentioned in that video is exploding higher here today. I want to speak about what's going on with that stock. And let me tell you, this is just the start of a multi-year massive move in regards to stock. And I'll kind of touch on why that's going on and also why that stock is exploding so big here today. So we'll speak about all that at the front of this video. Then I want to react to 3 videos specifically in this one. First one is we got a bunch of economic related data. Today I want to go over that with you guys and kind of tell you what some big things are to pay attention to there. Then I want to react to this one from just an hour ago on Bloomberg. Morgan Stanley's Mike Wilson sees S&P could hit 6,100 by year end. Now, I think this is big because I'm sure if you guys have been following me here on the reaction channel for the last couple of years, I've reacted to a lot of Mike Wilson videos. And Mike Wilson has definitely leaned bearish, cautious, negative on the market for honestly really like 2 years. And now all of a sudden he's flipping over the bullish side. So I think this is very interesting. So looking forward to reacting to that one. And the last video I want to react here is some talk about Tesla stock, Amazon, and Palantir stocks. So if you care anything about those 3 specific stocks, you're going to look forward to that portion of the video. That one's from about an hour ago on the Schwab Network. Okay. Alrighty, guys. So, by the way, appreciate everybody joining me as always. All I need from you guys, one thing only. You know the drill. Smash the like button, hit the like button, do whatever you got to do to make that like button glow. I appreciate y'all for doing that. I also appreciate everybody subscribed here to the channel. If you need access to all my premium courses, Become a Master Stock Market Millionaire Playbook, Dividend Investing Mastery, Stock Options Mastery, my private Discord chat, all those sorts of things, click the pinned comment down there, fill out an application. We'll see if we can get you access to that next week, okay? So let's get into this, guys. So what stock is it that popped huge? And how much upside is there still to go in regards to the stock? It is Wynn Resorts. Wynn Resorts was the very first stock I led off with in that particular video there. It's also a position I have in several different portfolios, including my Patreon portfolio. It is a pretty good sized position in the Patreon portfolio. I believe the cost basis in my Patreon portfolio is $85 or so. So those of you guys that obviously follow me on Patreon, you know all the moves I make in there each and every week, right? And I always have that in the description area if you're ever looking to join my Patreon and see the stocks I'm buying, right? But in regards to Wynn, making about a 9% move here today. So what's going on here and how much upside is there still to come in this stock? Well, Wynn is making headlines after billionaire Tillman Fertitta disclosed a 9.9% stake in the company, sending shares soaring more than 10%. Fertitta, well known for his savvy investments in hospitality and entertainment, now owns roughly 10.9 million shares of Wynn. Now, the important thing to understand about this gentleman, this is not just like some VC investor, right, that doesn't know this business or this industry very well. This man's an expert in this specific area, okay? Not like he's just like some guy that I got to put money somewhere. No. Tillman Fertitta is an expert in this industry, okay? While the stake is currently labeled as passive, industry insiders are buzzing that it might not stay that way for long. Analysts have noted that Wynn's recent underperformance in Macau and tempered Q4 projections didn't spook Fertitta, who seems to be eyeing the company as a long-term recovery in key markets like Las Vegas and Macau. Once again, if this man's buying, he's an expert on this industry, okay? Adding fuel to the optimism is Wynn's ambitious UAE expansion. The Wynn Al Marjan Island project, expected to open in 2027, could generate $1.8 million in annual revenue and $500 million in EBITDA by its 3rd year, according to analysts. Morgan Stanley highlighted the UAE opportunity as a unique catalyst, estimating that the project alone could add $12 per share to Wynn's valuation. As the exclusive operator to this untapped market for 3 to 5 years, Wynn is positioned to rake in outsized returns. Investors also are keeping an eye on other growth drivers, including steady performance in Las Vegas and the potential for increased shareholder returns. Now, the important thing to understand about this is since Wynn is the exclusive operator there for several years, right? It's going to be massive for Wynn. These numbers, they're just, kind of, people are just trying to throw darts at a dartboard here and trying to guess how big this is going to be. But I can tell you, whenever there's a new gaming market to open, the first few years of that new gaming market, the amount of money to be made is disgusting. And I'll tell you some stories, okay? When they first opened Atlantic City, Steve Wynn told some great stories about Atlantic City when it first opened in that first few years. He said operators were making so much money at that time, they just had stacks of cash just in crates because the operators in Atlantic City didn't even know where to put all the money. When Macau opened up and Sheldon Adelson showed Steve Wynn what was going on in Macau, he could not believe the activity there. He could not believe the amount of money being made there, right? Singapore, when Marina Bay Sands opened for the Sands in Singapore, right? That was like mind-blowing to folks how much money that property was bringing in. So now we're going to have this property in the Middle East, right? Exclusive operator. My guess is the amount of money that's going to be made in that first few years is going to be astronomical. That is the high probability. There's so much money in the Middle East, and it's such a new, exciting thing going on there, right? That it's going to probably blow a lot of people away in regards to how much is generated at that particular property, okay? So that's very, very exciting. Now, as far as Wynn goes here, check this out. Look at this. 2-year forward P is around 14 for the stock, well under the market. Forward P is 16, well under the market as well, right? So if you're wondering how much upside is still here for Wynn, okay, listen, this is just the baby start of this move, okay? I'm going to take you through what's going to happen over the next few years. 2025, what you're going to see likely play out, in my personal opinion, is value stocks and dividend stocks are going to start coming back to life. These stocks are dead and forgotten. They've been thrown in the gutter. No one cares about them right now. And they're going to care about them a lot over the next few years. But no one cares about these stocks. And if you look at where, everybody talks about the stock market's so great, this and that, is it? It's great for the very top tier companies, right? Nvidia and Meta and a lot of those stocks are all at all-time highs or close to all-time highs, right? And that's pushing indexes up because the weight's so heavy. But you look beneath that and you find a just massive amount of very quality, great companies that businesses are actually strengthening and their stock prices are doing nothing. And that goes through a lot of value stocks and dividend stocks. And I mean, there's a lot of those famous companies around right now, okay? So we're going to begin to revive those stocks in 2025. So that's the first kind of real stage of Wynn stock going up. 2026 happens. What happens in 2026? Well, the hype starts to build around the Middle East property opening up. Middle East property is supposed to open in 2027, right? So there's going to be a hype cycle that starts in 2026 that gets everybody very, very excited. All the Middle East properties open. There's going to have more and more people running projections. Wynn's probably going to be coming out with different numbers on what they're expecting for this and that, right? And it's a huge deal. It's a huge deal. And so people don't care about that in 2024 because they're like, the property's not open in 2027. Who cares? But by the time you get to 2026, the hype's going to be crazy around that, okay? So then you got crazy hype there. Then we roll into 2027. The property actually opens in the Middle East, right? So right now, people don't want anything China related. Wynn's got several properties in Macau. People don't want value and dividend stocks. They're going to come back to these stocks in quite a substantial way, okay? So that's kind of how the next few years are going to play out, in my personal opinion, in regards to Wynn stock. Now, let's speak about the dividend for a moment here. So the dividend, you've got to understand here. The dividend, by the way, the dividend is actually about to be paid out. If I recall, what is today? Today's the 14th of November, so basically people got to own the stock by November 15th if they want to receive this dividend. They're going to pay 25 cents per one share you own of this particular stock, right? But what is very important here is look down here. Look right here. This is how much they were paying out per quarter before Rona happened. Right, and totally disrupted their business all over the world, right? Vegas, Macau, Boston. Look at how much they were paying. They were paying $1 a share in dividends back then, right? They were paying 75 cents and then they upped it to $1. So if the shutdowns never happened and they didn't lose all that money over that period of time, who knows where the dividends would be at today? They might be paying out $1.25, $1.50, $1.75 per quarter in dividends. Per quarter, folks, okay? Instead, they're paying out 25 cents. Now, where is that dividend likely going? My opinion is, in 2025, they're going to up that dividend to 50 cents. That's my personal opinion. I could be wrong on that. That's what I believe is going to happen. They're going to up it to 50 cents per share per quarter in 2025. And then I believe in 2026, they're going to up it to 75 cents a share. And then 2027, when the Middle East property opens and they start pouring in all that money, they could probably get it back to $1 a share per quarter at that particular time. So I think they're going to do a 25 cent, 25 cent, 25 cent over the next several years, and we'll get back to that $1 a share per quarter, right? Which then you're talking about $4 a year. That's where I believe Wynn's going back to. Now, the stock's less than $100 here today, and I believe they're going to start, in 3 years from now, basically, they'll be paying out $4 per share you own. If you run the math on that, that's well over a 4% dividend yield based upon where the stock price is today, if that plays out what I think is going to play out here. Additionally, we're going into a lower interest rate environment, very positive for Wynn on several different fronts. The first front, the reason is so valuable that interest rates are now going down. When Wynn goes to build new properties, it's a lot easier to get financing. It's a lot cheaper to get financing, right? Additionally, people start looking around for yield more and more, and that's one of the big reasons why value and dividend stocks start to come back to life in 2025. Those treasuries are going to be going down and down and down likely in 2025, and then people are going to be looking and they're like, crap, man, like where do I get yield? And where do you start looking? You start looking at the dividend stocks, right? So the moral of the story is Wynn has tremendous upside in regards to stock price. I think the stock's likely going to 200 plus over the next few years, and that dividend has a long runway of growth ahead. And so I look at Wynn. No one wants this stock right now, other than maybe me and Tillman Fertitta, but I think there's going to be a lot of folks that want the stock. And once again, it's there's an expert in this industry that can't get enough Wynn shares right now, right? And my guess is he wants to keep it under 10% of a position there, likely for regulatory reasons, right? Because if he goes over 10%, so a lot of times that changes now you're not like a minority shareholder anymore. You start becoming like more of it gets much more complicated. And so if you ever notice, Warren Buffett a lot of times keeps his position sizing in a lot of companies under 10% as well. So yeah, we'll see what happens there. I think there's a lot of upside. But yeah, if you never got to check out that video, by the way, on financial education, you might want to, if you care anything about dividend stocks. If you don't care about dividend stocks, you're probably missing a great opportunity over this next 2 or 3 years. But if you care about that, definitely make sure you check out that video when this video is over. Top 7 dividend stocks to buy. I think you guys will find that a very, very valuable video. Okay. All right, let's get into the economic data, then Mike Wilson, and then Tesla, Amazon, Palantir.
HQ with the breaking news of the morning. The cousin to CPI, we have the wholesale version, PPI.
Producer
for
Price
October,
Index.
headline number expected up 0.2. Once again, delivers up 0.2. In the rearview mirror, it was 0 unchanged. 0 unchanged would have been, we had 4 of those in 2024 thus far. Popping up 0.2 equals where we were in August. Find a higher number, you go to June when it was up 0.3. If you strip out food and energy, up 0.3, hotter than expected, hotter than the rearview mirror, up 0.3. That's the warmest since it was up 0.5 in June, equals where we were in August. Now, if we strip out food, energy, and trade, also hotter than expected, up 0.3, in the rearview mirror up 0.1, hottest since July when it was up 0.4. Now let's take a step back and do a year over year, a bigger view. 2.4 expected, 2.3 expected, 2.4 warmer than expected. In the rearview mirror, 1.9, which was 1.8. 2.4 is the third highest reading of the year. To find a higher, you go to June, 2.9. Now, if we strip out food and energy on a year-over-year basis, expected 3%, rear view mirror 2.8. Comes in at 3.5. 3.5, that is, 3.1. 3.1, and that is hotter than expected. Strip out food, energy, and trade, that's 3.5. 3.5 is the warmest, going all the way back to March of last year. Now, these numbers are definitely warmer. If you look at initial claims, 217,000, that is 4,000 less than 221, which was last week, unrevised. 217 would be the lightest going back to May of 24. And finally, on continuing claims, they remain above 1.8 million, coming in darn close to expectations, 1,873,000, following a slightly revised 1,884,000. We see that yields have picked up a bit. I'm a little surprised, actually, that they haven't picked up more, considering, let's see, 1, 2, 3, 4, 5. Pretty much every single number is hotter than the rearview mirror, and every single number outside of the headline up 0.2 is higher than expected. We've seen 2-year note yields move from 4.26 to 4.29, basically unchanged-ish. and we see 10-year note yields went from 443 to 445. 445 is also unchanged-ish. We're hovering very near the lowest closing yield since the first couple of days in July in a 10-year. And maybe the biggest story of late outside of the big run in equities post-election is the re-steepening of the yield curve and how the market seems to keep short rates like 2-year notes more in line with Fed expectations, which was evident yesterday in CPI, versus the long end, which seems to be paying attention to a variety of other issues. Becky, back to you.
Okay, Rick, thank you. For more on the data, we want to bring in Jerome Schneider.
Yeah, I mean, at the end of the day, guys, when it came to all that economic data, they just caved there, and inflation data and everything was roughly in line with kind of what was expected. Like small, shifts up or down in different data there. But there was the only way the market's going to really react in any significant way to that data if there was like significant changes in something that made everybody say, oh boy. There's nothing there that made you say, oh boy, inflation's back. Nothing, nothing that also made you say, oh, the economy's done. Like, it's just, kind of what was expected there. Mike Wilson.
In our bull case, and we kind of talked about that in the last time we were on the show, and I think the other ones, but that we thought if a Republican sweep occurred, which was the most likely outcome, we could probably trade 6,100 probably before year end. So we're right there. Can we get higher than that in the near term? I think it's going to be hard. But yeah, we're marching higher. I mean, this outcome was unexpected 4 or 5 months ago. And as usual, the markets figured it out, right? So in September, we pivoted more cyclically. We got a little bit more constructive on the index for these reasons. And the animal spirits activity, I mean, goes back to what Mike was saying about CPI, PPI. You had the same problem a year ago where, like, when the economy gets going, you get velocity in the economy. That's the thing that can probably hold us back, is if rates start to back up again on concerns or starts to interpret maybe the Fed can't cut as aggressively, and then the multiples have to come down. But it'll be a stair step, right? We'll get pullbacks, probably be bought. It's a little euphoric right now. We'll have to have some consolidation.
Like, we still reach 6,000 with rates relatively high. And when we claw ourselves out of earnings season, have you liked what you've seen so far, such that you could even raise expectations into next year? Where's the risk?
Yeah, well, I think the risk, and we've talked about this, not a risk, it's an opportunity, is that it's broadening out now. Finally, after 2 years, we're finally starting to see a broadening out in the broader economy, and that translates into better stock performance for the average stock. So the market's speaking.
Wait, did you see my equal weighted chart?
Exactly, but the market's speaking loudly. The one chart that you probably haven't looked at, which I think is the most kind of bullish confirmation that there's a real change at foot, is that gold now is underperforming the stock market. So for the last year, gold has actually outperformed the stock market, and that to me is a sign that the real returns have been sort of muted. And so in the last week, the S&P divided by the gold ratio has gone up by almost 12%. That's an interesting development to me, and it signals that maybe this political change does have lasting implications for what I've been talking about, is this crowding out of government in the private economy. And the government can be shrunk, which is what they're talking about. Then maybe the private economy can blossom. And that's what the market's trying to sniff out. It's not going to be a smooth ride, so there'll be fits and starts, but that's kind of how we're thinking about it.
A lot to dig into there. We've definitely looked at both of those asset classes, but in isolation. Our producer's working on getting that chart. But let's build on what you're saying, that if the government can shrink, maybe the private economy can blossom. Is that a base case? I mean, do you think that will actually happen and you can invest around that?
Well, I think you have to start thinking about it. I mean, the market's already going there. So the question is, do I want to join what the market's telling me? I think you have to have a foot in that, at least 1 foot in that area. And that's what we did in September. We went to sort of quality cyclicals led by financials. That was the real sector that we got behind. But it also includes things like industrials, some small caps. Like, we haven't gone full in on small mid caps only because rates are still too high. And now with this question mark around inflation again, that's harder for us to get like uniformly bullish on smaller businesses. That doesn't mean that smaller businesses can't do better. It's just going to be more idiosyncratic.
So I feel like, did he say?
Yeah, I mean, there's several companies that I see that are just, that are smaller businesses that their numbers are just improving dramatically, right? First one that comes to mind is HNST, Honest Stock, right? Honest, you look at their numbers over this past 12 to 18 months, this last 4 to 6 quarters, what improvements. Revenue, gross margins, net margins, everything across the board for that company. Like, what a change. The cash flow is incredible, right? And there's just a lot of those companies out there that I see that are improving. Even Fubo's numbers, that's a smaller cap stock, FUBO, Fubo TV, streaming company. If you look at their numbers, they just keep improving. More subscribers, more revenue. Losses keep coming down quarter after quarter after quarter on a year-over-year basis. And so I see a lot of those sorts of companies that businesses are improving dramatically over this last 12 to 18 months in regards to companies that were losing crazy money are now losing small amounts of money. And some companies that were losing smaller amounts of money are now making money, right? And so there's a lot more stocks out there than just Honest and Fubo. I'm just telling you guys, I'm starting to see a lot of those sorts of companies come around.
His bull case was 66.50, so does
Could
that
you go
mean
higher?
63.50 was our bull case for May of next year.
But do you want to make that now your base case and give us a new bull case?
Well, we're working on that right now. You'll have to stay tuned because we can't talk about unpublished targets. But look, directionally, the market's already gone there. We've been kind of joining in that call for quite a while now, 3-4 months, and the more important call, just to be clear, the more important call is not the index. We've said this for a while, is being in the right parts of the market.
True.
And this year, we've navigated that pretty well, probably, I think, better than most in terms of being somewhat more defensive in the summer. We got the growth scares, and then we pivoted more cyclically as an example. That doesn't mean we get everything right, but that's what portfolio managers are really doing now. You got to be in the right places. It's not about just owning S&P. We got to beat the S&P.
I remember when you said that on Surveillance in April.
That's right. I mean, of all the appointments that I've seen so far, that's the one that offers, I think, the most interesting potential upside. Because we knew that President Trump would be tough on immigration. Okay, so the appointments there don't surprise anybody. We know that he's going to be tough on tariffs. All right, so that's not new news. What's new news is how serious are they actually about trying to make the government more efficient? You bring a guy like Elon Musk and Vivek Ramaswamy into this program. I mean, these are serious business people, and so I think that's exciting. It's going to be a tough road. I mean, our house view is it's going to be tough to actually cut spending. Hey, let's start with freezing spending. Let's try to we'll take a break and then we'll have a new theme, a new idea it's totally away from politics, right? That the market needs a new idea, a new theme to gravitate to, which, by the way, is one of the reasons why we're seeing some of these crazy moves in speculative areas, right? People are making money in crypto, as an example, and then they're funneling it into the next hot story they're hearing about on the internet, or they're from their best friend or whatever. That's a little frenzied at the moment.
Well, when we think about the stories of next year, you think a lot about taxes, and the debt to GDP ratio today is not the same as it was back in 2016. The tax cuts, or at least the extension of the 2017 tax proposals here, do you think that now that we have a red sweep, is just a sure thing, or is there some discipline there to keep some of that from rolling off?
Yeah, and do they lift the SALT cap and make it retroactive very early next year?
Well, the retroactive isn't happening, and I wish. But what I would say is, I think you're totally right. We've written about this too. This is not 2016. We don't have the slack in the balance sheet or in the economy itself, in the labor markets, particularly if we're going to reduce immigration and deport some of the folks who are here. We don't have that slack. So if they try to really push the envelope on increasing spending and reflating, inflation is going to become a problem really quickly. So they have to be careful about balancing. Okay, we're doing some cost cutting. That's great. Maybe then they could cut taxes a little bit, but I think you have to do more. I would freeze taxes. I would maybe extend the TCJA and then call it quits. But I'm not in government. But I think that the markets.
So, the moral of the story is here, listen to gentlemen like Mike Wilson obviously turned bullish here recently. It just makes me think, when you see a lot of these guys all bearish, just understand, and the market's doing really bad, just understand it's a huge buying opportunity, because Mike Wilson was so negative on the market for so long. And then he flipped here recently, with the market just up significantly. And you just got to understand, there's still money to be made in this market. There's going to be money to be made in other opportunities out there outside of just the big dogs, right? When I'm talking about 2025, 2026. But, just for future reference, when all these guys are bearish and everybody and their grandmas just has nothing but negative things to say about the market, be buying and be buying and be buying like it's nobody's business, okay? Let's get into Amazon, Tesla, Palantir.
The Armor Fund. Good to see you, Joe. Rebecca Walzer is worried about a big sell-off. I mean, she's been talking about 30% sell-off since, I think, last month. She's worried. She's worried about China. She's worried about global demand. And so she sees some big sell-off. At the same time, I have so many guests who are risk on. Where do you stand?
Yeah, the risk on trade is because there's a lot of optimism. There's a lot of potential stimulus coming in next year. I think the market's really pricing all that in. That does certainly pose a big risk. Of course, the higher we go, the bigger the risks are. I don't really want to fight this trend so much, but I got three names here, which are stocks which I love for the long haul, which are just flying high right now. I've got some ideas on how to get into them. I don't necessarily want to buy them, jump into these levels right now if I'm initiating a trade. I maybe want to raise my stops if I'm being long some of them, but I got some ideas how to get into them, just because waiting for a pullback is really what I really would love to do. But at the same time, volatility is there. We could still see upside surprises in these names, even at these high valuations.
Okay. And I know you have a few of the Mag 7 here. Let's talk about Tesla first. Some of your thoughts on Tesla.
Yeah, well, so we're still seeing this explosion of growth in electric vehicles. The core business of the company still has a bull case for it, of course, but they have so many other things going for them now. Just the innovation and the vertical integration of all these things. We know about the AI. We know about the potential in the robotics, their automated technology. So yes, I think all of that is kind of like the bottom line, the baseline. Of course, people are anticipating a friendly relationship with the new administration could be beneficial too.
Yeah, understood. Okay, let's see what Rick Duquette has to say about the charts. Rick?
Well, in regard to risk on versus risk off, discussions, it's more fun to be a bull. And you can see here that we have just been blasting off through many important technical levels here.
Tesla moves not off technicals. Tesla moves off sentiment, and Tesla moves off of what's going on with the actual business. Those are the two things that really affect the stock price. And then the third thing would be the options market, not technicals on a chart and drawing lines.
There's been such a mixed bag as to the new administration that maybe less regulation. They'll do a fast track for full self-driving and autonomous, but at the same time, maybe this administration wouldn't be as open to subsidies and such for Tesla and EVs and the like, and also the tariffs. Where does that fit in? So it seems like there is a little bit of a push and pull in the story, but there's still a lot of Tesla bulls out there. Final thought, Joe?
Yeah, pullback in subsidies for EVs, maybe that hurts some of the other car companies more than Tesla, given their competitive advantage where they already are in the space. We'll see how that plays out. But yes, I totally agree. My trades would be something along the lines of selling a downside put, looking at the 300 level, looking out to March, and then buying an upside call spread. Pairing that together, maybe collecting a little bit of money, gives me a couple of ways to play the name. Yes, I'd love to buy it down at 300 if it pulls back, but because I sell that put and do a call spread, I'm able to get into the name. So actually looking at the March 335, like 420 call spread, and I can sell the 300.
As a Tesla shareholder, so many people are on hopium, man. Hopium. Like straight up, they don't even understand anything about Tesla. It cracks me up. They think the EV credit going away is somehow a good thing for Tesla. Talk about hopium. No, as a Tesla shareholder for like 100 years now, I can tell you, no, it's not good. If they get rid of that EV credit, it's bad. I can tell you if an average person that makes $60,000, $70,000 a year wants to buy a Tesla and they see there's a $7,500 credit they can get for buying that Tesla, right? It's a very good thing for Tesla. You take that away and it makes the chance that somebody goes buys that car a lower probability. There's no way you can, like people want to try to justify this like some other way. As a Tesla shareholder that understands the company extremely well, I'm just telling you, it's not a good thing. Like anybody that tries to shift that as this is a good thing for Tesla, they're going to be getting rid of the $7,500 EV credit. I'm like, what are you talking about, man? That's just like crazy. People are crazy.
The downside, I'm collecting
not in a
like
good
$10
way.
to put that
in a
on.
clueless
So
way.
yes, that's how I'm playing it. If it pulls back, I'd love to buy it. The race is higher past 335. I want to be in it too.
Okay. Let's talk more about Amazon here, which is at new highs this week. Some of your thoughts on where this could be headed.
Yeah, so this is just a continuation of the cloud dominance that Amazon has. Yes, they own the retail business essentially in America. Everyone is buying everything off of Amazon, so that business is going great. But their really growing business is their AWS. It continues to grow. The more and more people start utilizing AI, more companies jumping on board. They're gonna have the AWS there. People are going to need to be on clouds, whether theirs or Microsoft's or another. So I'm fully on board for Amazon continuing their upward trajectory. As long as the economy stays strong, they're going to do fantastic, and that's just another way to get into the game. Without even worrying about, are they going to be the AI winner? Are they going to have the right software? They don't need to have the right, large language model that people like, but they do have the cloud, and they're going to win no matter what.
Yeah, the latest that they're really beefing up is telehealth and some low price hair loss drugs. For men in particular, but an anti-aging product. And Amazon, no, it says the headlines today. And so, there is nothing that Amazon doesn't do. It's amazing. Let's see here, Rick, at the chart, please.
Yeah, again, from my understanding, that scared a lot of HIM's shareholders today. The bottom line is anytime Amazon does anything, in any industry, it freaks a lot of people out. So if they see Amazon being a threat to HIMs, like people are going to get very, very scared of that. It's always the way it's been in regards to Amazon. Amazon announces they're going to go after something, people freak out. If Amazon said in 2025, we're going to take tools and we're going to take, construction materials and those sorts of things extremely serious next year, I can tell you Home Depot stock and Lowe's stock would be down 5-10%, if not 15% the next day. That's all Amazon has to do. We're going to take this very serious. We're going after this industry hard. Home improvement, we're going after that hard next year. Those stocks would crash like anything.
Final thoughts here, Joe, on that. Thank you, Rick.
Yeah, couldn't agree more. And that lines up very nicely. If you go out to March, I can put on a call spread and sell a put, collect some money. 200 we said was support. I'll sell that put. 215, 230 call spread. I'll be able to collect money to get into that name. We said 230 might be an upside target. So yes, that's how I'd be playing it if I'm entering a trade today.
Yeah, I mean, it's just been an unbelievable run too, right? It's up 45%.
So to the investors watching this, he's talking about, I'm going to sell call and put, blah, blah, blah. You don't have to do all that. You don't have to do all that as an investor. I don't bother with any of that, right? And I do just fine for myself. And also, did you hear the word choice he used? If I was looking to enter this as a trade. It's a different thought process for these traders than it is investors, right?
1 year. Okay, next up, the darling of Palantir, which just recently hit some highs as well. Where do you think this could be headed? It sounds like you've been riding the momentum wave. You don't want to give it up too quickly.
Absolutely. It's another darling. It's another, one that did very well following the election. They had a very good earnings report. Don't get me wrong. I think that's exactly why the stock's doing so well. And they just continue to grow. They have government entities. They have, enterprise sectors that are just continue to grow. They're 40% customer growth year over year. So that's just been the amazing story for me, is that their customers just continue to grow. Now they have an enormous amount of cash on hand. They have about $5 billion of cash on hand, which makes it unique when it comes to growth companies. Usually growth companies have a lot of debt while they're working through their growth problems. But yes, they have so much cash on hand where they have these boot camps where they're bringing on new customers. At some point, they could say to themselves, hey, this is the time. This is the year. People are going to be looking at this type of software now. We're going to be able to add more customers. At some point, they could take that cash and just do a crazy hiring spree where they're hiring more people to grow their customers faster. So that's one of the reasons why I love it. Is they're just kind of waiting and biding their time. It's gonna be another explosive growth for me. It's because they have that cash on hand. They can hire those people. So that's very exciting. Now that said, being at $62, $63, that's a very high, very lofty. It shouldn't be so surprising if there is a pullback in the name. So that'd be another area where another thing I'd be looking at, maybe adding on a pullback.
Yeah, you got to always keep an eye out for in regards to stocks when there's going through a fundamental change in the business model. So something I was talking about in regards to Palantir in 2023 was they were going through now a fundamental change in the business model. And the fundamental change was it used to take them a 6-12 month sales process to try to acquire a customer, right? It was a very lengthy process. But when they started the boot camps, AIP boot camps, that changed everything. That was a fundamental change in the business model because now they could show a customer Palantir, introduce them. They had no clue about Palantir, and within a day or a few days, that customer now could understand what Palantir could do for them. Like that. It's a fundamental change in the business model if you can take a sales cycle from 6, 12, 18 months down to days or weeks. I mean, your business model is going to be changed. It's going to completely change where your growth rates are going in the future. That's something I kept calling out again and again and again last year, right? And obviously, we've seen that play out because their growth rates have been, you look at the last 4 or 5 quarters for Palantir, acceleration in growth rate, acceleration, right? And we're probably going to have another acceleration this next quarter. Don't be surprised if revenue growth is 32, 33% next quarter versus this past quarter, it was 30%, right? So, it's just a beautiful, beautiful thing. Now, the valuation has gotten extremely rich on Palantir. There's no debating that, right? And so we're pricing in a lot of future growth, and that's the one thing that sucks in regards to stock now. But as a shareholder, it's beautiful to see, all this stuff come to fruition. And now the only question for me with Palantir is where's the top at for revenue growth? That is my only question. Are we going to top at 32, 33%? Are we going to accelerate to 35%? Could we hit a 40% number? And that's all I'm trying to figure out now at this point in time. Because the rest is history. It's beautiful, and the profitability is exploding for the company. Woo! Very, very exciting. Very obviously great stock to be a shareholder of. Alrighty, guys, appreciate you joining me as always. Thanks so much for being here. Pin comment down there if you're looking for access to all of my premium courses. Become Master Stock Market, Millionaire Playbook, Stock Options Mastery, Dividend Investing Mastery. If you're looking for access to my private Discord chat, all those sorts of things. Pin comment down there. Click on that. We'll see if we can get you access to all that next week. Much love and have a great day.